she suckered me in, you know what I mean? It was like all the looks, she had everything, but then when you got to know her, she was just like the rest of them. You know, man, that's how this month has been. Look good, lined up. Only one little piece that I could say, you know, here's why you shouldn't have taken the trade, which we'll get into in a second. But, you know, didn't work. The losing run continues. I don't know what the streak is. The streak might be at 6, but the run overall is like 1 for a lot this month. But hey, I'm just gonna keep doing what I've been doing, you know, because I'll get into that in a minute here and my thought process and all that stuff. So hopefully it all makes sense. But lost $61 trading IWM, 5-minute bear flag downside trade. You know, you look, what the fuck you doing? Why you shorting? Here's why I went for the short side. Okay, let's just go back and talk about it here, right? 1 hour time frame. Broaden it out. What do you see? Well, what I see is you have a lower high potentially relative to this point. You have a couple of days, or yesterday and then today, continuing the pullback to the downside. So on the 5-minute time frame, you've got a little bit of a slope to the downside. So there's that trend. And when you zoom it in, you know, to the past couple of days, or the past like week and a half, you had really good volume zone right here. So my thought process was a back test towards the 216 area wouldn't be crazy based off volume. So my target being 217, I thought was a very logical or reasonable spot. And you got a good setup. I mean, we did. Straight up, we got exactly what I was looking for to be. Well, not exactly what I was looking for. What I have traded a million times in the past. Like when I say a million times, obviously, no. But I have lots of trades, hundreds of trades that I've journaled and logged with TradeZilla, but probably, 30, 40, 50 trades that were going to be identical to this. Meaning we have a push down to lows, a big or a bounce up, big bounce doesn't matter, inside of a move, a bigger move to the downside on the shorter time frames, and then a move back down, a consolidation just prior to low of day, which tends to be really good bets. That's what I wrote down in the journal. This tends to be really good bets. So when I get in and we make that push down towards low a day, break low a day, I go, okay, this looks good. We've got a good setup. Trade's panning out kind of how, I want it to pan out. And then it just completely reverses on you and slaps you right in the face and goes right back up, hits stop loss, and it's off to the races to the upside. Nothing you can do. Simple as that. I mean, I would trade it again. But like I said, the only thing that I could say and look back at me and go, the fuck you doing? Is this. Now, make the argument that, well, yes, you're inside of this. This is a huge, we're looking at a huge time frame. When you narrow in the time frame for what I am doing is trading a 5-minute, trade. When you narrow in the time frame, that's not as relevant. It is relevant here, but it's not as relevant as the 1 hour. And what have you done for me lately? This is a lot more relevant than the big picture. And so you can say, okay, still uptrend. Yes. So I was, I guess, if you look back, kind of playing against that, but you can make the argument that we had, multiple hours, many hours of downtrend and a pullback to the downside and a big retracement zone in the volume profile to fill back through. So I think it was a valid trade. I'll be honest with you. I'll take the $60 loss. It's not that big of a deal. And I would trade it again. I really would, because I got my setup. Now, if I'm forcing my, random shit, different story. But here's the thing, right? So here's where I get, you go back and forth, and here's my thought on this. I was literally just thinking this like, an hour ago. Why, like, when do you decide to take it versus not to take it? You know what I'm saying? So like overall, like the overall market's doing whatever it's doing. We're up or down, we're up or down, we're just kind of bouncing around. When that breaks, you will get good moves. But I can't predict when that's going to happen, right? I can't. You can't. I can't. Nobody can, right? So when you have a lot of people who try to tell you this is how you should do it, do this, is very, there's a lot more nuance. It's not as simple as you would think, but you could make it as simple as you want. And so the way that I approach it and the way that I will go about it, continue in the future until I have enough data to tell me otherwise, is I'm just going to trade when I see my setup, and I can make an argument for it being good on the higher time frames when I trade my setup. So on the 5-minute time frame, if you have a 1 hour time frame that aligns and makes sense from what I'm looking for, and the volume profile aligns, hence like what we just saw on the volume profile, how there's room down to 216, I'm going to take that trade if I get my setup and it triggers. Now, if it's not triggering, then it's simple. Don't take the trade. Now, you could see your setup, but maybe the overall volume and time frames don't align, and so you don't take the trade. The problem is that when you start playing the game of, like, taking this trade, I kind of had in the back of my head, I'm like, we've been in a chop zone, we've been in, a choppy environment. I wouldn't be surprised if we get in, we get a little bit of a pop down, then boom, right back. And it did. That's exactly what happened. So I kept the risk pretty tight, pretty small. This was a 2-to-1 risk reward, so I was going to make about 120 on the trade or so, if it worked. But my approach is and has been take the shots. Like, because if you start, it's a slippery slope, in my view, when you start playing that game of, I don't know, we've been choppy, so I'm going to avoid. Well, when we finally are not choppy, what if you say that? And now you start missing what could have been really good opportunities. And, if you trade other there's a million ways to trade. Not saying that you have to trade choppy. You don't have to trade chop. You can trade. Someone might be doing really good on this setup. Maybe that's just not how I do it and how I have data back behind what I do. But you might have data that says when you see shit like this, get long, and play it. And it would have worked. It could have worked, right? So, fighting that like, I know it's been bad or it hasn't been great, but if I see it, I'm still going to take it. Like, that mentality is kind of how I have to play it, because if you don't, you will eventually, or you will inevitably miss some of the biggest movers when those consolidations break and when we stop trading choppy. Because I can't tell you when it's going to happen. The longer we go, the higher the probability that we're going to break this like choppier cycle and this inconsistent, this lack of momentum cycle. But I don't know when that's going to happen. Each day that goes by, the probabilities are increasing that we're going to break that, but it could keep going in, who knows how long. So, and you just got to take advantage of when we don't have that, if that's how you trade, or if we stay like this long enough, then we'll have to build a system off the back of this, So it's based off of, I think a lot of data and time, basically, at the end of the day. But that was a trade recap. Nothing crazy. The losing streak continues, as you know. And if you go back to our monthly chart, we are down not 800. Yeah, we should be down $820. 821.62 to be exact on the month. And that is number 6 in a row. But all these trades that I have had in a row have been really small. So we'll see what happens. We are at a 5.88% win rate. Not what I envisioned when I began the month, but here we are. And we have open swings. I have a couple open swings now. Had one. I had another I added like on Friday last week, and then I added another one today. So we'll see what happens with those. But should be a lot of recaps when those start to close out. Should be a lot of recaps to come. I don't know how many we'll have. But yesterday's trade was not a day trade, but it ended up being a day trade because I just didn't like how it closed. I ended up getting back into that position because today looks fine. So I could have avoided the $38 loss. However, I respected what I usually do. And I'm not going to hold a chart that breaks out. Here's the chart, RTX. I'm not going to hold a position on a stock. Let's go to here. That breaks out, triggers my entry, but then closes underneath the breakout point. I just won't do it. It's not part of what I like to see. And so I will not hold that. And the next day just so happens to be reconfirming or breaking back out. And so, okay, cool. That's why we're getting back in that with the tight stop, and we'll see. we'll see what happens, you know, one at a time. Hope it was helpful. I hope these recaps are helping from a more of a psychology perspective, because seeing how you may or may not want to approach things when you think about them. I mean, I just don't think that when you look at it, getting pissed or, you know, doubling down or blah, all these, you know, these things that you could do to spiral, I just don't think that that will be appropriate here. However, I'm going to continue to take shots and keep, you know, swinging, because when you stop swinging, that tends to be when things will change. And that's what I found over the course of the past 16 months. So there you have it. I'll see you in the next one. I'll leave a TradeZella link. There's a discount code as well if you're interested in the video description box. Peace.